Hello guys, welcome to my YouTube channel. So today's topic is IAS 16 Property, Plant and Equipment. So IAS 16 defines property, plant and equipment as tangible items that is held for business use and are expected to be used more than a period. If the property, plant and equipment have to be recognized as a tangible item, then it should meet two criteria. And first is held for business purpose. The item should be held for business purpose and it should be more than 1 year. If the two criteria is met, then it comes under IAS 16 property, plant and equipment as tangible item. Okay. Next is recognition. An item of property, plant and equipment must be recognized as an asset when it is probable that the asset's future economic benefit will flow to the entity, and this ant is very important. The cost of the asset can be reliably measured. So here, if an item of PPE should be recognized as an asset, then it should meet two criteria. One is probable economic benefit flow to the entity, and second one is reliably measured. Cost must be reliably measured. Okay, so if this two criteria, that is the asset should generate an economic benefit and it should flow to the entity, and also the cost of the asset can be reliably measured, then item of the property, plant and equipment will be recognized as an asset under IAS 16. Next, cost. Cost comprises, first is initial cost and second one is subsequent cost. Initial cost, cost which can be capitalized, and subsequent cost, cost which cannot be capitalized. In initial cost, it includes cost incurred for bringing, cost incurred for bringing an asset into working condition. So the cost for bringing that asset into the location and working condition, that cost will be included in initial cost. Then which cost will be included? One-time payment. One-time payment will be included in initial cost. Then third one is economic benefit inflow. Economic benefit inflow. Then fourth one is dismantling cost. Dismantling cost, it includes restoration cost if you are going to derecognize the asset or dispose the asset. So the cost which is incurred for that. Okay, then fifth one is purchase price. Purchase price, it includes trade discounts. So these are the costs which can be included in initial cost. The cost included in initial cost can be capitalized. Okay. But in subsequent cost, the cost included in subsequent cost, it cannot be capitalized. It includes administration and general overhead. Administration and general overhead. Overhead cost will not be capitalized as these are subsequent costs. Then second one is abnormal cost. Abnormal cost. So abnormal cost includes cost like repairs, then wastage, if fire happen, or if in terms of repairs. So in these are examples of abnormal cost. So these will be included in subsequent costs that which cannot be capitalized. Then third one is cost incurred after the asset is physically ready for use. The cost after bringing the asset into working condition or location. Next, fourth one, relocation cost or reorganization cost. If there is any relocation cost or reorganization cost, it will also be it will also not capitalized. These are the costs which will be included in subsequent under subsequent cost, and subsequent costs which cannot be capitalized. Administration and general overhead will not be included. Abnormal cost will not be included. Cost incurred after the asset is physically ready for use will not be included. Relocation cost and reorganization cost also will not be included. Next is model. IAS 16 allows to choose either cost model or revaluation model. Okay, if you choose cost model, then the formula is the carrying amount is equal to initial amount minus depreciation. Okay, here there is no revaluation surplus or loss is there. Here just you need to identify the carrying amount by using the formula initial amount minus depreciation. Okay, how to calculate depreciation? Calculation of depreciation is initial cost. Initial cost, we have said earlier that initial cost includes cost of bringing the asset into working condition, then one-time payment, then a dismantling cost, then economic benefit, inflow, purchasing price. These are the costs which will be included in initial cost. So after including everything, you will get an initial cost, then reduce minus residual value divided by useful life. So this is the formula for depreciation. Initial cost minus residual value divided by useful life. Then you will get depreciation. Then reduce the depreciation from the initial amount. You will get the carrying amount of the asset. Okay. The accounting treatment for cost model is SOPL. In SOPL, what will be included? We will include depreciation expense. Okay, amount. Then in SOFP, we will include as in under assets, machine or whatever it is, machine, plant, whatever it is. Let's say it is machine, that amount. Which amount will be here in the machine area? This amount, carrying amount. Carrying amount will be shown under SOFP, asset area, and depreciation expense. This amount will be shown here. Okay. This is all about cost model. Next is revaluation model. Under revaluation model, first we want to find the carrying amount by using the formula. After finding the carrying amount, the revalued amount will be given. This amount minus revaluation amount minus carrying amount. Then if it is positive, then surplus, negative, then loss. Okay, so if it is surplus, then in SOPL will show depreciation expense, and in OCI, that is other comprehensive income, we will show this revaluation surplus. Okay, we will show this revaluation surplus under OCI. Then next, SOFP, statement of financial position. Under asset, machine, revalued amount will be shown here. Here we are not showing carrying amount. We will show this revaluation amount here. And then under equity, we will show other components of equity. Revaluation surplus amount. The amount which we have written in OCI will be written here also. So under cost model, we have we have to identify only carrying amount, and that carrying amount will be shown under machine. Under this machine, this area, here we will show carrying amount, but in terms of revaluation model, here we show revalued amount, and any surplus will be shown under OCI as well as under equity, SOFP, equity area, other components of equity. Okay, depreciation expense we will calculate by using the formula initial cost minus residual value divided by useful life, and reduce it from the initial amount. Okay, then you will get carrying amount, and revalued amount will be given, and if by using this formula, if it is positive then it is surplus, and if it is negative then it will be loss. Next is, if it is a loss, revaluation loss, then it will be shown as expense in SOPL. Like under SOPL we have depre expense. Under that you have to show revaluation loss. That amount we have to show here. Then SOFP, machine, asset, machine. Okay. So only difference is here we will show revaluation loss in SOPL, and if it is surplus we will show it in OCI, and other components of equity which will come under SOFP. If it is loss, it will be shown in SOPL. Okay, I hope everyone understood how to calculate under cost model and revaluation model in terms of property, plant and equipment. Next, disposal or derecognition. Disposal means an asset which you have bought. A company have bought that asset, machine, and you are disposing it or derecognizing it from the financial statement. IAS 16 says that an asset should be derecognized. So an asset should be derecognized when it should be derecognized? When it is disposed of or no economic benefit inflow. In this case, an asset should be derecognized or disposed. Okay, derecognized when it is disposed of, or when the economic benefit are expected from the no further economic benefit are expected from the assets use. by using the asset there is no economic benefit or the asset is disposed of, then you can derecognize the asset. When a revalued asset is disposed of, any revaluation surplus may be directly transferred to retained earnings or may be left in. Okay, this means that we have in normal before disposal we have OCI and other components of equity. Okay, we have OCI and OCE. Okay, in under this, okay, when the asset is disposed of, revalued asset is disposed of, this revaluation surplus, the surplus which is recognized under OCI and OCE, either it will be directly transferred to retained earnings or it will be left in the revaluation surplus within the other components of equity, or it will be left here itself, or it will be transferred to retained earnings. It will be given in the question that either transfer it to the retained earnings or no information will be given. If no information is given, then let it be in OCE itself. Otherwise, if it is said like directly transferred, then transfer it to retained earnings. Okay. So here we have come to an end with this session. IAS 16 property, plant and equipment. I hope everyone understood this topic, and if you have any doubts regarding any of the IAS and IFRS standards, just comment below. I will be making a video. Okay guys, stay tuned for my next video.